Hello, my Teaserking family. How is everybody today? Wonderful day. Went to the gold store. Didn't know what I was going to get. You had ounces, you had half ounces, you had quarter ounces, you had tenth of an ounce. Prices went up. So I ended up buying this. This is the 1 ounce Eagle, 2,400. Now I was going to get his quarter ounces were $6.60. His half ounce was $14.50 or something. It was a high price. I was going to get the 2 quarter ounces. It was cheaper than buying the half ounce. And then I said, what the hell? Let's get an ounce. At 2,400. Possibly the last ounce I'll get as the price goes up. But I might get, the quarters at $6.50 are cheap enough. The half's getting there. Was what was it? 1,200, 1,300. It was $6.80 for the quarters, so it would have made it $13.60 versus the $13.80, I think, for the half ounce. Yeah, so they would have been $2,600. So I started looking at it, and I said, okay, let's get the. We can treat ourselves to the ounce. Just so much good news right now on it that I had to go pull the trigger. Now, for Bobby Bow, and everybody who's trying to teach gold, how do I spend gold at the grocery store or at the restaurant? I did a video earlier today and explained it. And basically the assumption was, how are you going to be able to use this at the grocery store? When this goes out, you won't be able to use this. And what people don't understand is gold is an asset and it's money. It's a double. Mahomes is an asset, but it's not money. This is money and an asset. It's a double. It's been suppressed. So you're getting a great price on it as COMEX is now blown up. Excuse me. So talking to my owner buddy at the gold store, he sits there and goes, well, I got like 20 pandas in, something like that, like $2,400 a piece. He says, but I got to sell them now. He says, if I hold on to it, when the price goes down, I'll be stuck with them. And I said to him, why do you think the price is going to go down? COMEX is blown up. The price is not going to go down. There's no selling. Who is selling the gold? Central banks are buying it. Everybody else is buying it. And the reason you're buying it, as I stated in my other video, was to get out of the dollar. So if I'm trying to get out of the dollar, and I like today I can use real gold. If I'm trying to get out of the dollar and I got real gold, okay, so I got out of this because this is worthless to get this, and this is going up and up and up. Why would I sell this to get that? This isn't a stock. Please understand, you did not buy this as a stock to sell it as a profit. You were not buying this at $2,000 and it went up to $2,400 and you're selling it to make $400. That is not the reason you're buying this. You're buying this because this is going out, and the only other money that you can get into is this. And this is going to go to the moon, and you're not going to sell it now as sort of a profit taking, because the problem is if you sell it now, you're going to get back on the Titanic. Why do you want to get back on the Titanic? If the reason you're selling it, the reason you're selling this is to get off the Titanic. This is the Titanic. So if you're selling this to get gold, if you're selling this to get gold, why would you sell this to get back on the Titanic? The Titanic is sinking. This has no value. So if I have no value, why would I want to sell something of value for something of no value? They printed 20.7 trillion of these. This is 255,000 tons, of which all of it's already out there. Very new, everybody kind of has it already. You can't print this. You can never print 20 trillion tons of this. This has 20 trillion. This is used to manipulate people, blackmail people, and everything else. All these other countries who are getting, that's why they're de-dollarizing. And that's my point. They're using this. They'll loan you this under conditions. They loan us under conditions. This is mine. It's in my hand. You can't come back at me and say it's worthless. There's nothing you can really do. I have it, and it's got a good value. So let's check what it's at now. $23.21 is gold, and $27.34 is silver. So if we can just get to the end of the day at these figures, we'll have gold locked in at 23, and we'll have silver locked in over 27. According to Mark McGuire, and I'll go through that video with you, the point was 26.22 is what we had to get past. And you can see it's just jumped to 27. And the same thing, gold's up 32. I told you I felt it would be a big day today. It's funny, at night it was down to 22.77, and I was starting to panic a little bit. Oh no, shit, what's going on? And then all of a sudden I noticed 10 o'clock did not come down, it went up. So that helps. So as I say, the COMEX is breaking. It's broke gold. They moved to Bitcoin because they can't control gold because there's too much buying by central banks. And if they're going to do derivatives to bet the gold goes down and they're controlling the market and they won't let it go, they've gotten blown up because the BRICS countries are buying it and they have to buy it based on it being a tier one supplier. And therefore, they have no say in keeping this price down. So they're going to lose their ass because when you do a derivative, you're saying, I'm betting this is going to go down. So if you're betting it's going to go down and then the central banks are buying it and you have to have the gold to give it to them now. That's the new tier one, Basel 3, all that shit. You have to have the physical. So if somebody buys it like China or India or Russia, you have to have it. So they don't have it, right? They just were playing games, derivatives, and everything. That's why they're out of it. So now they'll destroy Bitcoin, but they can manipulate that market much easier. And again, they don't want competition for the dollar. So I think they believe Bitcoin's more competition for the dollar than gold, which they can't control anyway. Well, listen, there was a really good EGON one I stumbled on. It was 10 minutes long. I'm going to play that whole thing. And we got Mark McGuire. So a little bit on bricks, a little bit on silver, and the gold price. Good comment here. Money does not require any kind of ledger. The Bitcoin people, the Madoffs. All right. So let's get cracking with Marcus M. McGuire.
In spot terms. And as we assessed in our first of January Live from the Vault episode, which was on the 10th, and the title, pretty much the title says of that episode said it all. Because unbeknownst to the led by the nose COMEX-centric CTA sellers, a golden bear trap had been baited for them to fall into. And as we reported at that time, our liquidity providers have reported very large central bank sovereign spot gold bids were actually aggregated in large tonnage size as about $50 below the opening market price, which we'd identified had already been established as the next higher stair step for gold to rally off into the end of the quarter, which is pretty much what happened. And these massive central bank sovereigns physical orders were layered at exactly spot 2000. Now, the reason we drew attention to this massive central bank support level was to counter the many calls referencing a rising dollar, and then there was people were saying it's sufficient to see gold retrace back into the 1860 area. Remember, we talked about this number over the period of time, all through January, most of February. People were saying, no, really watch out above. Here it comes. We're going to see a retracement. Now, while technically, if that had gained required traction, self-fulfilling to a certain extent, first-year liquidity providers estimated that actually a dip into the central bank bids at 2000 would actually be very short-lived and presented a massive, huge opportunity for us to buy gold at a price that will never be revisited. And at the open of January trade, we were experiencing the strong dollar rally. It told us that the automated, those inverse spec CTA synthetic gold futures sellers. So in other words, dollar goes up, they sell gold. Ludicrous, because they don't realize it's dislocated. So we figured this would present a huge opportunity for central banks to unload this rising dollar price into cheaper gold. And that by being a little patient, which we said at the time, and for us to also then coattail them in exchanging these higher priced dollars for physical gold. And as we reported, the liquidity providers had assessed that should this central bank spot 2000 bid level be offered in the synthetic markets, it would be quickly filled, and it would force insiders exposed to a wall of NSFR delivery obligations, compliant delivery obligations, to commence a strategic unwind of their short bets against gold far, far earlier than they had actually hoped for. And this played out perfectly. $1.05 level. I mean, to provide context, really, and it's important to do this. So, because the dollar had risen from 101 to 105, and as I say, on the 13th of February, and the CTAs had blindly entered into this gold bear trap, and it was sprung the moment they overshot the spot gold central bank bids at 2000. Unbeknownst to them. In fact, our liquidity providers are somewhat surprised the cartel insiders had not front-run this central bank buy trigger, and as was evidenced into the flash dip and rebound, it suggested they had actually misjudged the scale of the momentum that these CTAs had actually generated. And as we've previously assessed, and it's backed up by the Bloomberg report we uncovered in a recent episode, these CTAs control about 75% of the synthetic undeliverable open interest, and they drive the paper oil, gold, silver positions, both long and short. And it was this herd of momentum-driven sellers that triggered this central bank bid level to be actually hit. And while it was the trigger point for the cartel to commence an actual short rinse of these bear-trapped traders, there was insufficient cover for them to profit from this retrade.
All right, Mark's fumbling on.
Can you expand on this, please?
Yes, Shane. Now, following losing control of the central bank-driven gold price during the first quarter, this will be the quarter where the Fed, a single outline central bank still fighting the price rise in gold, has to fold its naked gold hand. Has to. Central bank demand is simply too strong. And I'm talking about global central bank demand. It's simply too strong. And the Fed doesn't have the bullion to deliver into a wider global central bank sovereign race to swap their fast appreciating dollars for real bullion. And without enough COMEX speculator-held open interest, in other words, the chips in the casino, to offset official short bets against gold, Basel III and SFR conditions enabling the conversion of synthetically priced COMEX gold have made it impossible for the Fed to continue to shoot itself in the foot. It doesn't have bullion. Not only have we evidenced central bank sovereign and institutional demand explode, it's the increasing percentage of commodity trading advisors, speculators, who now also recognize Basel III and SFR gold as an alternative first-tier asset class to hedge risk trades.
So what he said is they're out of COMEX. Too much activity, and they don't have enough bullion to meet the demand of the central banks. So basically, JP Morgan has left the building. He's out of COMEX gold. There's still a little bit in COMEX silver, but they are out of COMEX gold, which is then pushing. This is why the price keeps going up, and you see very little pushback because they can't short it, because then they have to come up with the gold, which they don't have. As you'll hear from EGON, we don't have not 8,000 tons. We don't have 8 tons. We don't have 8 bars in Fort Knox. So basically what he's saying is the bullion banks, the JP Morgans, are out of COMEX because they don't have the bars. And that's why when we look at COMEX the last week, all it does is go boom, right? There's a little bit of pushback for whatever reason, and then and there's no reason. So the guy at the gold store says, well, I got the Chinese pandas, but when the price goes It's okay now, but when the price goes down, and I'm like, price isn't going down, they're out of COMEX. The price can't go down. You're worrying about something you shouldn't be worried about. You got a great deal on the pandas. Just hold on to them. They're going to be. You'll have no problem selling them and making a profit on them. Then we were talking about the store, and there was a lot of people selling because they don't. He said, "You're the only one that understands it's paper and physical." People coming in see the record high of 2250, and they come in to sell their gold, thinking, "Well, this is the high. I'm going to sell high." And what they don't realize is they're getting back on the Titanic. So you got off the Titanic. Now, as the Titanic is sinking, you're selling your gold and getting Titanic. You're getting money. So no matter what you got, you lost, because not only did you sell it way too early, you're back in the Titanic. So people don't understand the Titanic sinking, which is why I did the earlier video. So please make sure you watch that. That's a very basic for the kids, for the wives and the girlfriends who don't understand it. Once you see that, you'll understand. Yeah, now I understand why we need gold. And so anyway, so people are coming into the store, and that's why I had a lot. Let me show you. So you can see there's the ounce of gold. There's 2 Maple Leafs and a Cougaran. Then there's 2 half-ounce Americans and 2 quarter-ounce Americans, 2 tenth of an ounce Americans, and 3 tenth of an ounce Maple Leafs. So my first thought was, oh, good, a half. I was going to buy the half. That's what I initially. I was going to buy a half and then a tenth, but the half was like 1,300. I mean, it was like it went really high. It was 1,200 last time, and now it's 13. And I thought he really raised it a lot, so I backed away from that. Then I was going to buy the 2 quarter ounces here were cheaper than the 1/2 ounce. And I said, okay, maybe I'll buy that. So I'm going to spend, 1,400. And then I still wanted the 10th. And I said, you know what? Let me go after you. So I bought you. That's what I bought. That's the ouncer. That was last time. So that's what I got. I kind of stay away from the bar. I'm not a big bar fan, but there you go. And so he had quarters and half, but this is people coming in selling this to him. He still didn't have that much. On a normal day, if he had the half like he did last week, I would have bought the half. Or since the 2 quarters were cheaper than the half, I would have bought the 2 quarters. But they each total they kind of were like 25, 26. They're like 2,600 an ounce. And I figured out I'll get my boy for 2,400. It just seemed to make sense to get this guy for 24, only because of the raised half and quarter ounces. So that's what I did. And a lot of people are selling their gold way too early. And not only that, but then what do they get? They get dollars again. And they don't realize the dollar's gone. I don't, it's hard for people to believe the government's so stupid and would actually print 20.7 trillion dollars of dollars, but they have. And it's worthless. Nobody wants it. So if nobody wants it, it's worthless. Nobody will buy our debt because they won't get paid back. And what we'll do for medium of exchange, my guess is they'll come out with a new one that'll be not backed by anything. That'll be worthless. Or maybe they make it digital or give an option of a digital, but that's still going to be, that's not the answer. I don't like digital. I don't like if I can't hold my money. I want to hold my baby. I want to hold my baby. I don't want to sit there. So I think it's not, it'd be like a digital Mahomes. Well, you own the card, but digitally, you don't really own it. Well, why would I want it? Well, I want it in my hands. I can look at it. Digital. What's digital? Bitcoin. You can't even look at it. You don't even know what you got. You don't even know if it's real. To tell you the truth, it could be the biggest Ponzi scheme, which wouldn't surprise me a bit. But you don't even know if it's real. You don't have anything. You have some sort of digital wallet that says, "Oh, by the way, your Bitcoin's worth $60,000 or whatever you got in the account." All right, try selling it. Well, Luke sold it, but he never even saw a Bitcoin. He just had something in his account and he got out before it went to zero. So I give him credit for that. And then he's buying the gold. And, anyway, little watermark.
And what's that doing is, even though that's a paper trade, that's diluting an ever declining open interest for the Fed to successfully game. Now, in an attempt to repay the remaining Bank of International Gold swaps and borrowed GLD shares, this leaves the Fed constrained as to how many paper market CTAs they can suck into puking up their recent long bets, which do comprise an element of what is driving the current gold rally. And we should expect attempts to do so, but this will be limited in scope as all dips offering opportunities to swap dollars for gold are being jumped on. Now, even the mainstream media is waking up to that. Not only have COMEX gold stocks open interest, in other words, chips supply in the COMEX available to be traded, not only have they contracted by half over the last 4 years, BlackRock and JP Morgan recently said gold has been the go-to hedge for most portfolios. I mean, you can't deny it. And these are the sticky longs we've been drawing attention to, and they are using gold as a first-year alternative hedge to their active risk positions. So yeah, they're embedded in the paper markets. Some CTAs are not authorized or don't have it in their mandate to own physical gold. And so they will buy an ETF, they will buy a paper gold.
Okay, so where are we at? Oh, okay, we're doing Bitcoin. Okay.
But what we're saying is,
so this is Bitcoin ETF.
Are not rinsable. And as we've recently drawn attention to, interestingly, and just as we predicted, we see the Fed beginning to switch tactics, trying to inject volatility into Bitcoin, which has now come into the frame for really is an unwanted dollar benchmark. So it's under 3 months, and there's 11 Bitcoin ETFs, and there's about 59 billion of assets under management just within this inflow within this 3 months, and they're growing exponentially, and it's averaging around about 130 million a day. And we did an episode about this, but it makes sense. Fighting a losing battle against every other central bank seeking a higher gold price to back their respective currencies, and notwithstanding the upcoming alternate BRICS payment systems, the Fed battle tactics, they just have to change. And through the employment of position concentration, aggregated within the sanctioned Bitcoin ETFs, the plunge protection team, who is the team that manages the dollar against all the other crosses, can use this concentrated positioning to inject volatility just as they have for decades in gold, usually at and around news events to target visible stops. So they can do the same thing in the Bitcoin ETFs, where they know the stops. Of course they do. And a lot of these guys are behind the financing of it. And in the process, thereby they're also injecting volatility into the Bitcoin. And that's something the COMEX was formed to do 50 years ago in gold. But Bitcoin is really just another competitor to the dollar. And given the Fed acknowledges intervening in all the foreign exchange process, it becomes far preferable to short and then buy back synthetic Bitcoin against speculators and selling paper gold, which then they have to turn into physical, and then buy it back. So it's far more preferable to short Bitcoin, and then ultimately, because NSFR compliant gold has to be physically delivered, and they don't have it. So this is really the focus now, and it's also a losing de-dollarization battle, because probably Bitcoin will continue to rise. And do you think they care? They just print the money. In other words, they don't have to deliver physical gold, which they don't have, but they can print. They're eminently able to print dollars. So it's a slow exit point, but it is a change in tactics.
Now, Andrew, you had mentioned that you had assessed some of the higher stair steps which should be watched. Can you share with our community what these stair steps are, please?
Yes, Shane. So what we're saying is, while we will experience intra-month, intra-quarter Fed-induced volatility around Fed speak, and by the end of the fourth quarter of 2024, spot gold will be plus our minimum 2,500 spot level. And most physical market liquidity providers are now gravitating to closer to $3,000 per ounce, to which we also subscribe. These are really conservative estimates, and they still don't do justice to where gold should be regarding other currencies.
Andrew, in our very last...
So you can see they've been listening to me. So as a minimum, we're looking at 3,000 an ounce. Well, we're going to be there before the end of the year, because with COMEX out, with the JP Morgan out of COMEX, and they're not going to do the derivatives, because then they actually have to come up with the physical. What that's going to mean is this is just going to keep going up. The banks will keep buying it, and as it goes up, right? It's at 23 now. It'll be at 24 next week. And when BRICS announces middle of May, it goes to 27, 28. It'll just keep going. And as you just said, it's not even near where it should be because it's been suppressed, which is my point. But since you have COMEX out of the picture and everybody buying it, so what's going to happen is the average Joe like us, we buy, I bought an ounce, but they're pushing the price a little bit. And then the central banks are really not pushing the price according to EGON, which I'll play after. They buy it from each other or something. I don't know. But it's going up, but not where it should be going up, which is all the people ditching the dollars to buy gold throughout the world, every country. And that's the point. Once they all start realizing that and they all start buying it, and there's no COMEX to knock it down and put up the derivative shorts to lower the price, and you don't want to sell it to get into dollars, there's going to be very few sells just for expense. And the rest of it's going to be people buying just buying the gold to hold, to know that the dollar's out. So as more people realize the BRICS and the euro and the Swiss franc, the British pound, the dollar, the Canadian, as these people start realizing the dollars are worthless and they've been overprinted, they'll all flock into gold, and then we'll really see gold go up. And we haven't seen that yet. I mean, I think we're seeing more of it than they give credit for. I don't think they have a mechanism. Do they know I bought an ounce, and then how much does the ounce have on it? But whatever's triggering this up, you're not going to see the down by COMEX. There's not going to be profit taking. What is profit taking with gold? It's not a stock. What is profit taking? Me, I bought some at 1,700. I should sell it at 2,500. I made 800. This is not a stock. That's not why you play gold. You play gold because the alternative is you're in the Titanic. So why would I want to sell my gold at, let's say it hits 3,000? I still don't want to sell my gold because then I have to get back on the Titanic. So the only way I'm going to sell my gold is if the BRICS makes gold very expensive, and then they come out with gold-backed currency, which is what they're going to do. We'll hear about that in a minute. And then once they do that, but then the gold price will go to the moon when they come out with the gold-backed currency. Then they'll reevaluate gold and make it 10,000. So you're going to get that big hit. But right now, why would I want to sell my gold? It's not a stock. Why would I want to profit take on this? This is not something I want to profit take. Do you profit take your Rolex? Do you profit take this? I mean, okay, it's 50 count Mahomes. Do I profit take it? No, why? There's no need to. I'll just hold it and let it go up and up. Like I told the barbecue guy, what do we do when it hits 10 grand? Wait till it hits 20 grand. Basically, because without COMEX pulling it down, we're actually going to get a free market physical price. And we all know that the real gold price, as you just said, is much, much higher because it's been repressed. And that's what we're looking at. So there's no reason to sell your gold at 2,500, at 3,000, unless you need to pay a bill or a credit card or some sort of bill or medical or something. If you don't need to do that, you're not selling it. That's why I keep a little bit of cash to handle other things, but I don't want to go into my gold. I don't even want to sell it, even though now it's 23 and a quarter or whatever. All right, so now here's the BRICS question.
Episode only 2 weeks ago, you drew attention to the upcoming BRICS summit. Can you update us on what you expect to see from this?
So yes, Shane, this is actually raises the revaluation trigger, possibly forcing a reaction from Western central banks to up the ante and before the end of the second quarter. And start to think about revaluing. This could be the trigger point. And the focus is on the BRICS 10 plus meeting, which is the May 14th to 19th Kazan summit next month. It's literally only 3 weeks away. Where following current beta testing, Glacier's green-lighted BRICS currency baskets will be formally tabled. Now, while many will continue to underestimate the bullish gold effect of this alternate trading currency, it is because most are focusing on the SDR-like currency basket, which, due to the current array of dislocation of the BRICS 10 FX currency imbalances, it would take years to significantly accelerate the de-dollarizing process. However, the lion's share of the green-lighted currency is the second of Glazier's two currency baskets, which is backed by commodities and gold. And as we reported last time, the clue that this is the preferred of the two currency baskets and that the lion's share will utilize gold and hard commodities. Yes, and we said last time, this actually may include silver. I can't be sure of it, but it could easily do. And what really drew us to it was this statement by the Foreign Minister, Sergei Ryabkov, that this currency will more effectively, and as he put it, he said, use the available resources of the countries in mutual settlements to avoid losses due to differences in exchange rates. And that could actually, with the yuan depreciating today and at lower levels, possible revaluations there, it really makes an awful lot of sense. This is the currency that makes sense. And especially as China and Russia and the BRICS countries have the gold. Now, given the BRICS 10 members, plus members, that is, control the lion's share of the multi-trillion-dollar oil and energy complex. The scale of this upcoming de-dollarization process just should not be underestimated. In fact, one of my most respected liquidity providers, very closely associated to the Russian-Chinese markets, sees very recent geopolitical escalations, and I'm talking about over the last 2 weeks, and the increased weaponization of the SWIFT clearing systems to seriously bring forward the implementation of Glazier's gold-backed commodity currency. And given the scale of this, $3,000 would then become the bottom of their range assessments. And a gold commodity backed BRICS currency will significantly raise the dollar price of energy and oil, feeding an unwelcome inflationary input right the way into the West. It's just not appreciated. And to put things into context, ultimately, it's not that the gold price is actually rising. It's just actually the depreciating purchasing power of the bankrupt, debt-laden dollar and all its related fiat cousins. It's en route, slipping to zero against gold. There will come a point, as we've said before, where no amount of dollars will buy an ounce of gold. And think of, I always just bring to mind the wheelbarrow of printed Deutschmarks they took to buy a loaf of bread. In fact, at one point, it was just really used for warming fuel. And given current geopolitical escalations are accelerating, Russia and China's efforts to open up fresh sanction-proof trade routes and clearing systems, this de-dollarization process is rapidly expanding, escalating. And none of this is yet factored into the paper price of gold. And we would expect to see the first central bank gold revaluations actually within this second quarter. There's a lot going on. And while we're on track to hit a minimum of 2,500 spot, and think now this comes forward to the end of this second quarter, our extremely well-connected liquidity providers are indicating all the pieces of the puzzle are in place and that 3,000 gold, $1 gold, looks magnetic.
Now, Andrew, you know my favorite topic.
He's going to talk silver next. So let's take a quick break here. So they do that, makes the demand for gold higher. It makes the price of gold higher because, again, if you have a gold-backed currency, right? So let's say this is gold back. I should be able to go to the bank and say, give me $5 worth of gold. And they have to have it. They have to have gold for every dollar they have. That's what a gold-backed currency is. So therefore, they'll have to raise the gold price a lot. And then we hope it still is free market. This will be the question. Okay, so they come out with $5,000 gold for the currency. Are they going to allow a free market or keep it at 5,000? That's going to be the question. And then how will that affect the U.S. and everything? So I'm hoping that we keep the free market price of gold. So even though they have a gold standard, it'll allow the gold price to go up because the demand is huge. And so I think we're looking at a minimum of $5,000, probably more like 10 grand when they get down to the gold-backed currency. I don't see how they can, because just because it's 10,000 an ounce, they're going to have to print a lot of dollars, right? So that's the point. You've got Russia and China and India. You got all these people, so you're going to have a really high gold price so you can print all these gold-backed currency, enough gold dollars. So, and it's a BRICS gold-backed currency. That's why it'll work, because it's BRICS. So all the BRICS countries get the gold-backed currency because nobody's going to trust Russia and China. However, you will trust gold. Gold's the man. So that's where you have it. So we're looking good. Besides what's happening now with COMEX blowing up, you then have the BRICS gold-backed currency May 14th. So I think you're looking at a minimum of 5,000, but I seriously think 10. And then here we have to really determine what are they going to do for the medium of exchange, or are we going to use the BRICS gold backed currency, in which case then it's got to be 20,000 an ounce. So this is the question. We don't have gold, so I don't know how we're going to do a gold backed currency. However, if we don't do a gold backed currency, we're, everybody's screwed because your dollar's not backed by anything. It's worthless. So maybe you can go to the grocery store with the dollar as opposed to the gold, but it's the same concept. You're not buying gold to go to the grocery store. You're not buying gold, to buy a car. I mean, you need money for that. What gold is money, but if it gets accepted, that's the thing. And now people are going, well, how do I get change? I get how am I going to buy a steak with this? How are they going to change it? Well, I mean, obviously you're not. You're going to change it first and then take that and go to the grocery store. Or you use your credit card and then you cash this in and pay your credit card or something. I don't know. But that's where we're at. Okay, so you can see much, much higher. BRICS on a go. COMEX is gone. Beautiful. Except for silver. It's still hanging around a little bit, but it's blowing up there. All right. Last subject topic for Mark McGuire is today's silver market.
It's silver here, but you had mentioned that silver's underperformance versus gold. Can you tell us what you're seeing in the silver market now?
Silver has been a laggard, as you well know. And this is a direct result of the cartel's capping efforts. While all other asset classes were rising, by design, the retail silver market collapsed into this outrageous capping. But while this fooled silver investors to dump their retail silver, and they were, the wholesale market was deliberately being starved of supply, driving this unprecedented retail to wholesale disconnect. And this capping related to massive first quarter cartel bets that they'd made against silver futures at $25. Lo and behold, it closed below that level. But what happened the day after? And as we drew attention to in our last episode, look, please review that analysis. Capping $25 into the wholesale shortages forced the cartel to borrow SLV, like SLV ETFs, at huge premiums. Remember, they went through the roof. And as soon as the first quarter bets were squared last Thursday, the massive coiled disconnect between the resulting lackluster retail demand versus massive wholesale shortages began to uncoil. Now, first-tier liquidity providers assess that silver will outperform gold during the next quarter in a dramatic way, even though gold is rising. And as we previously assessed, silver has wholly different trading dynamics. COMEX silver futures, when we get an EF, by the end of the fourth quarter of 2024, spot gold will be plus our minimum 2,500 spot level. And most physical market liquidity providers,
Underperformance versus gold.
actually pointless. And as these unallocated silver flows, they just end up circling back into the cartel's hands in unallocated form. But Indian buyers are directly accessing COMEX silver futures positions and forcing physical delivery at the COMEX vault back door. The larger wholesale buyers are also tapping silver ETFs, exchange-traded funds, for supply. This suggests the current OPEC structure is actually skewed against the insiders who have, through the whole of quarter one, been aggressively capping $25. But given the drain of registered COMEX silver stocks are exiting the COMEX ring fence, the result is a forced deleveraging of COMEX open interest, forcing a 93% paper covering obligation on the cartel because it's coming out of the back vault. They don't have normally in an EFP it would go through to an unallocated position, never have to be fully financed. It'd be just netted out amongst a daisy chain of bullion banks, of cartel bullion banks. But being someone backing up to the back door forces them to actually fully fund these contracts. So the large tonnage size SLV alphas that we've reported in our last episode were literally being borrowed to flywheel this demand. But these borrowed SLV shares have to be repaid. And while the targeted hot money rinses have relieved certainly some of the stress, Indian buyers, starved of spot silver supply, have turned on the COMEX for this physical delivery. And given the shortages of available registered COMEX inventories as well, it's doubtful there's sufficient speculator open interest to keep a lid on the extremely tight for supply silver market during the second quarter. And as we assessed in the last episode, we've been looking for a breach. Remember, we mentioned this was the number that we were really looking for, a breach of $26.225, which is what we believe is, and all our liquidity providers believe, this is the last line of defense for the cartel. And although we breached it in Asia overnight and went through it, this is Wednesday, expect a fight. But a pit close on Friday after non-farm payrolls. Above that, it will open up a very large short squeeze rally. Now, this rally, when it takes root, will be physically driven, also having exposed themselves to the most outrageous denial of supply shenanigans into thousands of tons of unfilled refinery orders. Really, end users are increasingly going to the mines themselves to cut out the cartel's control. And while we have further evidence of this, Rob Kintz provided us a great example of Tesla directly financing a Mexican miner to obtain direct supply. And by cutting out the cartel's financing hold on miners, they will increasingly lose control of the capped silver market. And as we've said, pigs get fat, hogs get slaughtered, and the cartel's greed has put them in the frame for this ultimate demise. Direct financing of silver projects has picked up significantly. And we're going to obviously update you more on this very, very soon because there's a lot going on here. The current setup suggests it's going to be impossible for the cartel to hold silver back from catching up to mirroring, joined at the hip, all-time gold market highs. And we are very, very close, as we said last time, to this inflection point that will drive a similar to gold, physically driven rally in silver. So to kind of sum this up, the 26,225 level, $26.22 is the watched inflection trigger. And given the underlying refinery shortage into unprecedented strong demand, liquidity providers are predicting this to be the last cartel defense line before silver mirrors gold's all-time physically driven high. It is going to move very, very quickly. Saw it in March 2020. You watch this time. So really what we're saying is gold or silver, they're both in strong, massive demand as we progress through 2024. I guess the question is, how are you doing? Are you well positioned for this? It's going to take a significant amount of dollars, pounds, euros, etc. to buy the same ounce, even if it's just one component of a wealth protection strategy. There is only one question, guys, remaining. How much physical do you now own? Thank you.
I own an ounce more than I had this morning. So as you can see, silver's going to the moon, gold's going to the moon. Really, these COMEX that keep the price down are blowing up because the beauty of them, the MMT guys printing this to pay for the debt without any realization that if you keep printing this, it goes to zero. The MMT Keynesians think this, you can print as much as you want, it has no effect on it. Where are they getting that from? How stupid are these guys? Right. And this is why Jim Reichertz and Rick Rude and these guys, why I sit there and laugh at them, because they're just clueless of what the reality is. You can't keep printing it and expect nothing to be no problem with it. So that's my point. And then so we're starting everybody. So it's blowing up COMEX for us. So this has been really good timing. We've been able to buy a lot of gold and silver at really, really, really cheap prices. Silver still at the store was 29 an ounce, and he had more buffaloes in. And like I said, his tenth of an ounces went to 265. The quarter of an ounces went up to 660. His half ounces was 1380, and then the ounces were 24. He did have a not much different between the Eagle and the Cougaran and the Maple Leaf. Cougaran and Maple Leaf were actually the same, and they're only a few dollars less. And so I said, well, I just bought a Maple Leaf, so I don't need another. It's like, let's get an Eagle. I can always use another one of those. But it was really close between getting a quarter and a half. But when he raised the prices, it was going to cost me roughly $2,100 to get a half and a quarter. And if I get the other quarter, it would have been $1,200, and it would have been $2,500. So it made no sense to buy the half and the 2 quarters because of the raised prices, which led me into, okay, do I want the 2 quarters, which would have made sense. That would have been okay at $1,300. But once I was going to spend that much, it just made more sense to buy the ounce. So normally I'm buying the quarters and the halves because they're, I'm only going to spend $500. But I was going to spend close to $2,000. A lot of that is because I took the money out of the JP Morgan account. And so I figured, okay, and I bought 1 ounce with it. So I was planning on buying 2 ounces with it. And then getting the unemployment and the Social Security. So I'll be in really good shape. So this is kind of a treat to get out of the JP Morgan. All right. What else was I going to talk about? So what was I watching? I was watching Kill Bill. Okay. Let's go through the NCAA, and then we're going to go back to EGON. EGON's is really good. It's 9 minutes, but it's very good. Let's go. Gold 23.23, silver 27.37. On its way. Let's just verify. Let's verify our line. So tomorrow we've got NC State, Purdue, 9.5, 146.5. We're going to take North Carolina State plus 9.5. They beat Duke, so let's give credit for that. Connecticut, 11.5, 161.5. Ordinarily, I'd go over because Alabama scores a ton, but Illinois scored a ton, and Connecticut held them to 50. I think Connecticut covers the 11, and so I don't know if NC State wins the game, but NC State certainly looks good and will not get blown out here. I'm not sold on Purdue. I don't like their big man. It seems clumsy. Connecticut, they also have a big man, but they have a good offensive scheme. So let's lay the 11.5 in Connecticut, take the 9.5 in NC State. So that's basketball. Baseball, we're still a little early on because we really want to get the ERAs. So let's look at baseball today. Let's see. All right. So coming up, Baltimore at Pittsburgh. Now we're just getting a feeling of the pitchers. Grayson Rodriguez for Baltimore, Jared Jones for Pittsburgh. Grayson Rodriguez is 1-0 with the 1.50 ERA. It's too early, though. We need to get him innings to see, because it's only been, a week, because this is still the first week. So we'll keep an eye on Grayson Rodriguez. San Diego, San Francisco, we got Dylan Cease, who I remember 0-1 with a 3.86 against Jordan Hicks for the 49ers. So, again, nothing to really look at, just to get an eye. Let's just get our feet wet. The Mets in Cincinnati, Jose Quintana for the Mets, 0-0 with the 3.86. Hunter Green for Cincinnati, 0-0 with the 3.86. Over under a 9. Looks like an over, but it's still a little early. Philly, Washington. Aaronola for Philly. Wasn't he on the Yankees last year or the year before? 0-1 with the 12.46. We had a bad first game. Patrick Corbin for Washington, 0-0 and 8-3. So this would be an over for sure, with a 12.46 and an 8.31 and over under of 8. This Corbin must really stink, because Philly's a 185 at Washington with the pitcher who's 0-1 with the 12.46. They're the heavy favorite, so this should go over 8. But again, we're just there's they played 6 games. Wow, they must start earlier in March. Arizona and Atlanta. In other words, like March 25th now instead of April 1st or whatever. Arizona, Atlanta. We got Henry 0-1 with 11.25. We'll keep an eye on him for Arizona. Spencer Strider 0-0 with the 3.60 for Atlanta. We'll keep an eye on that. They've roughly 7 games. Atlanta's a huge favorite, 3.50. Wow. I don't know Spencer Strider, but big thing. The White Sox 1-5 against KC, 3-4. These teams suck. Eric Fetty for the White Sox, 0-0 with a 3.86. Brady Singer 1-0 with an 0-0. So he threw a shutout for his 5 or 6 innings the first game. So are the White Sox our bitches? Are they the team we're going to bet against, like we did with the other Oakland and KC last year? White Sox were 1-5, so we'll see. Houston, Texas, World Series. No, they couldn't have been in the World Series on the same. Houston lost, and then Texas won. Yeah, okay. Houston 2-5, Texas 4-2. Hunter Brown for Houston, 0-0 with an 0-0, and Cody Bradford 1-0 with the 3.60. Is Verlander and Scherzer still on Houston and Texas? So we'll see what happens. Houston's favored. Says Bradford must stink. He's 1-0 with the 3.6. Or Hunter Brown's really good, just didn't get a decision. Seattle, Milwaukee. Logan Gilbert for Seattle, 0-0 with a 1.29. Freddie Peralta for Milwaukee, 1-0 with a 1.50. This looks like a good under. And the over-under 7.5. Milwaukee 4-1. Seattle 3-4. Whatever that means. See, it's all skewed because it's who you played, right? So Detroit played Chicago, beat them 3 straight. Is Detroit any good? Well, they beat Chicago. How bad Chicago? Well, you don't really know. So we don't know if that was a good 3 wins for Detroit, or just they played a real bad team in Chicago, or what's going on. The Red Sox in California, Cutter Crawford 0-0 with an 0-0 against Griffin Channing, 0-1 with a 9-0-0. Boston is a small favorite, and the over-under 8.5. Boston's 5-2, and California's 4-2. So I don't know what you do with this. It's weird that Boston's a 110 favorite, with Griffin Canning being 0-1 with a 9 ERA. You would think that they would be they'd be a 150 or so. So again, it's too early. Let's wait about 2 weeks. Toronto beat the Yanks 3-0. Bobby didn't play apparently. Garcia got the win 1-0 with a 0-0-0, but is he a reliever? Well, actually, Chad Green got the save. He's the reliever for Toronto. One save with a 2-7-0. And the Tigers beat Oakland 5-4. Foley 2-0 with a 0-0-0 against Lucas Urquhart. 0-1 with a 6.44 ERA. Alex Lang got the save, his first save. So is this Jason Foley any good? I don't know. That we have to see. So we got two finals. So I wouldn't bet any of this at this point unless there's something that you know, like Bobby's going to play for the Mets today. Then I could see maybe jumping on them. They're 1-5. You disregard the record at this point. The Cubs 6, the Dodgers 5 in the 6th inning. Tampa and Colorado 0-0 in the first. Pittsburgh, Baltimore 0-0 in the first. So just getting our feet wet. And then what we'll do is we'll learn the pitchers. Is the pitcher, so in other words, let's go bunch of crappy pitchers. Is Brady Singer 1-0 with an 0-0 really that good? We know now what we know is Verlander and Scherzer and McCullough from Tampa Bay. We'll see who else we can add to the list. I think the Yankees, didn't they, or whoever won the Cy Young was pretty good. I don't remember his name. Gilbert Peralta. Is Peralta good? 1-0 with a 1.50 ERA. Let's see. Cutter Crawford 0-0 with an 0. Is he really going to shut out everybody? And is Griffin Canning's 0-1 with a 9 ERA really going to give up 9 runs a game? So that's what you stoically look at. The NFL draft, as we talk about. So there's another quarterback that I'm not sure is there, is the Missouri quarterback, Brady Cook. Very good. And the running back, I believe his name's Schrader. And Dylan, whoever at Washington, is a very strong running back. And Oduzzi's a very strong receiver. See, Washington had the balance, as did Oregon. They had the balance. They could run and pass. Alabama really wasn't that good of a passing team. Michigan couldn't pass. Georgia was pretty balanced, as was Florida State was real balanced until they lost their quarterback. So this is the problem, is, who's out there. So we'll see if Brady Cook is there. He's another good one, or maybe he comes out next year and then he'd be up there with Cam Rising and Gabriel. But that's what we're looking for. Your best quarterbacks, Penix, Daniels, Bo Nix, boom, boom, boom. And then I would say Hartman is next. And Caleb, I'm not that high on Caleb. And then you got, I don't even understand Drake May and J.J. McCarthy. Again, I watched J.J. McCarthy against Georgia, the year before. I think McNamara started out as the quarterback and they were getting killed, and he comes in. He looked like shit. He didn't do anything. He didn't do anything against Alabama, and he didn't do anything against Washington. They had 4 long runs. He wasn't doing anything. He was doing these short little passes. I'll fake it into the line, and then the tight end runs, and I run, and I throw a 2-yard pass to the tight end or a screen pass, like, okay, Whippy, you're a superstar. I'm going to draft you first because you can do that. Anyway, Georgia sacked him a bunch of times. Alabama, I don't know how many sacks they had on him, but he's not good. I wouldn't be wasting your time. Missouri guy, like the Tulane guy, like Bryn, I think's his name. If he's eligible, again, I don't know. So we will see, but those are it. The running backs, Henderson from Ohio State, my guy from Oklahoma State, Washington's guy, Oregon's guy, Utah probably has a runner in there. UCLA, they all probably have somebody that you could draft. So you need the balance. This is where these guys are so stupid. They changed the rules to make passing a little easier. Then they don't value the running back, which is a big mistake. And then you have to have a good running back. You can't let the defense just play two deep zone all game. So if you're running Pacheco, they got to get out of their two deep zone. But by you making it easy by not having running, then they just sit in a two deep zone, and then your passing game is zero. And then you start doing Lamar where, well, he can't really throw, but they're going to play a two deep zone for some reason against Lamar, which I don't know. And then when they go back, he'll run. So he can gain 5 yards, 10 yards in the middle of the field. But when we get down to the red zone, he's useless because there's no space to go. So keep that in mind. You want the pocket passer. You do not want the other. So keep that understanding in the draft. I see some mock drafts which are really stupid. They got all these linemen going, and then they got what was it, Minnesota trading up to get New England's pick. Why would New England, who needs a quarterback, trade it to Minnesota, who needs a quarterback? Although New England will screw up, they'll probably take Drake May or McCarthy because they're the worst. They're the worst drafting team I've ever seen. They got so lucky on Brady. Brady shouldn't have been drafted. He was nothing in college, really. He didn't, he could throw the ball well, but he was nothing. It's hard to believe he was as good as he was in the pros, as bad as he looked in college. I mean, again, I watched the games back then. I was watching Michigan, and when they put Brady in, you weren't like, oh, good. You were like, what are they doing with Brady in there? Put the other guy back in. Anyway, but that's New England. They're terrible at drafting receivers, running backs, and they got lucky with Brady. That was it. Otherwise, forget about it. They'll never win another title. They'll be lucky to make the playoffs with this coach. They'll be lucky to win 3 games, and they don't have the quarterback. If they trade and don't take the third pick, they're out of their minds. I mean, you have a great chance to take Daniels or Bo Nix or Penix. You're going to screw that up. Minnesota, they need to draft up because they need to get one of those 3. What is with J.J. McCarthy? He's nothing. He's terrible. What are you're going to make him ahead of? Okay, I could see if you didn't have anybody, but you got Penix, Bo Nix, and Daniels, and then you got Hartman, and then you've got Caleb, all ahead of this J.J. McCarthy guy. And if you got the Tulane quarterback or you got the Missouri quarterback, then you really, got more ammunition. Brady Cook, I thought was very good, but I don't know if he's in the draft or not. I'll have to look. But that's what we got. So that's the draft that's coming in a month. Again, movies, we've talked about The Gambler and Rounders and all these gambling type of movies where people, The Gambler, he really gambled for the action. I'm not going to say the fun of it. He gambled for the action. He had no bankroll. He had no cutoff. He didn't play streaks. He was a terrible gambler, which is why he lost. When he lost, he didn't cut his thing. He bet 3 basketball games, $15,000 a piece instead of just 1, or 3 for $5,000 a piece. is what he should have done. Why is he going 15,000? Because he's got 45. And if I lose, then I just need another 45. I got to go back to my mother. So that's when and then I noticed he was kind of mean to the mother. And then the grandfather who had all this money, who didn't help him, was wrong, should have helped him. But he wasn't really nice to him. He said, I loved you. And when I needed your help, you weren't there. And, but he was friends to the basketball player. So anyway, so did like the grandfather, and that was it. So again, he didn't know how to gamble. He gambled he gambled for the action, which I kind of get that, but you shouldn't be gambling for. I mean, you gamble to win, or you're in trouble. I mean, yeah, I know you do entertainment, right? So maybe you go golfing, and you're not going to make money. You're spending money. Or you go to dinner. I get that. That's fine. But what I don't get is when you start playing, when you make $1,500 a month and you start playing $15,000 on games, that's something's wrong with you there. You're never going to win because you don't have any system or streak in place. So that's the gambler. That's why we do money manage, and that's why we do bet streaks, and that's why we do. So, like I said, if I'm at Caesars and I hit an double an 18 and get a 3 for 21, you better believe your ass I'm not leaving that table for a long time. Anyway, so then you got rounders where the guy says, well, if you don't know who the idiot is at the table, you're the idiot. Well, you were the idiot, buddy. And he sits there and he says, you don't play your hand, you play the man. And then what does he do? He plays his hand. I got a full house. I'm going to bet $15,000 on it. This is why you must be smart and stoic and ask the question, why is he betting 15,000? If he was bluffing, would he bet 15,000 on a bluff? That's a big amount to bluff with. So I probably, he did check and check. So he's probably not bluffing. A bluffer bets on every street, right? He's trying to get you out from the beginning. So he's going to keep bluffing. But the guy who's got the hand wants to keep you in. So he hit trip aces. So he's checking and checking and checking. And that's what you've got to really understand. Anyway, so that's the difference. You've got to read the tells. He's eating his Oreo cookies. He didn't know that was his tell. I mean, come on. And that's the most obvious when if I'm sitting and I go like this, I'm comfortable, I'm relaxed, I got a good hand, right? So that's an obvious tell. But, he clearly didn't know what he was doing. And then he made it sound like it. Oh, Johnny Chan won the World Series by checking his straight that he flopped. Well, why in God's name would he bet the straight? You never bet the straight. And the problem is the other guy was an idiot, Eric Seidel. I'd love to play that guy. What an idiot. He checked. Oh, I'm going to bet because he checks. Oh, really? You think he's that stupid? So all I got to do is have a good hand and check, and you're going to bet for me? Well, are you that stupid? Well, if he checks, I'm going to bet because he's got nothing. Oh, really? Yeah, ABC poker, huh? So again, that's the problem with the rounders. It's too nobody can read. Eating the cookies, and he screwed up most of his stuff. And then they try to cheat, and it was a sad movie. Really stupid. Again, gambling itself. Me playing poker, I take 300. If I lose it, that's it. I'm not going to lose 44,000. I'm going to lose 300. However, if I win, then I'm going to win more. I can only lose 300. I can win 3,000. if I catch quads and everybody's got a full house and everybody bets a lot, and that's happened to me. I flopped quads, and there was a bet and there was a raise, and I'm sitting there with quads going, I haven't even bet yet. Okay, I'll call. Then the next card came out, and it was like all in, a third guy all in, and I'm going, I haven't even bet yet. So I'm all in and I haven't made a bet, and I got quads. It was hysterical. And then finally, that was just a fluke. I didn't understand that. I made a ton on that hand, and I never bet once with quads. Anyway, so that's how you should limit it. Again, I play to win. Like, to me, that's an investment. To me, I'm being strategic. I'm a business. I'm an investor. I'm trying to make money gambling. Otherwise, to me, if I want excitement, good movie, go bowling, women, whatever. That's my excitement. Going out with Jenna is more exciting than that's that's entertainment, not blowing it on gambling. So we were talking about assets. So as you get out of money, so we realize the money's worthless. So we could go play poker with it and figure, what's the difference? It's worthless. So if I lose, who cares? But that's not really prudent. You want to get into an asset. So gambling on poker is not an asset. That's just entertainment. That's an investment, like buying a stock. It's not an asset. It's an asset when you own it. So you buy 1,000 shares of Microsoft. Now it's an asset to you. It has a value, but you're gambling, right? And I find most people, when they play stocks, do not have any idea what they're doing. They'll buy Amazon or Apple because that's what everybody tells them to do. They don't know how to read a financial statement, and it's really gambling. And when you get up, you should profit take, like I did with the gold stock. I'd buy 1,000 shares of Newmont at $50 a share. And if it went up 70 cents and I made $700, I cashed out. It was an investment to me. Okay, I'm going to play it. Now I could never lose the 1,000 shares, because it's not going to go from 50 to 0, right? It's that can never happen. Although it has, the Newmont mining has gone down to 30 or so, but not in one day. So it was 50, now it's 30. That's why I'm not in it anymore. But yeah, it's the same concept. You're waiting for the price. You're just watching because the 10 o'clock drop. So once you figured out the 10 o'clock drop, you're just sitting there waiting. All right, let's wait. 10 o'clock. Let's wait till it starts going up. And then after a couple, it drops $1, and it starts going up about 5 cents. And you can see now it's coming up. Now I jump in. So I've already let it drop, and now it's coming up. Now I'm buying it on the upward analytics or whatever, algorithm. So I'm buying it on the algorithm going up. And when the algorithms, it goes up, and then as it starts to level, I give it a little bit of room. It could still go up, or when it starts dropping is when I sell. And that's all I did. And I got in and I got out, and it was gambling at a very high level, but kind of seeing the cards, knowing the 10 o'clock drop, and then waiting for the 10:30, so it's boom, and then it starts coming up. And I just waited for the boom to end. And the only time I got caught is when it boomed, then it started coming up, and then it went back down. That was what I had to be careful of. That's how I wouldn't lose, but I would have to maybe wait 2 or 3 days to cash in. So I couldn't do it every day. But if it would just do this and then go and then start going up, buy it, and then it goes up 60, 70, 80 cents, then I would get out. So, and that's what normally happens. So normally I'd make $600, $700 and I'd get out. Sometimes when the stock, when it double dipped me, so it starts going up, goes back down. Now I got to wait for it to get over the point. And sometimes I did really good at it, that the next day it would go up $2 before the opening bell or at the opening bell. And now I'm up $1.50. So now I'm like, oh, this is great. And again, it was 1,000 shares. So, 10 cents is $100. So you're not looking for much. And you basically did it every day. I mean, the account would settle. You had the money in the account, so off you went. But some days I did it twice. It dropped at 10, and then I bought it at 10:30 on the way up, and it went up to about 1. And then it started coming back down. I'd get out, and then it would drop a lot, and then it would go down, and then it would start coming up again, and I would buy it again. It was like a W, right? And then I want to spell it this way, but I'm backwards. And so it was like, now the second time it's dropping, starts going up. Now I buy it again. And so there were days I doubled it twice. Now that's a day trading type of investing, gambling. That's very, big gamble. And I don't know if it would work if they're out of COMEX now and they're not going to do the 10 o'clock drop. I don't know that it would work. I would just have to buy the stock and hold on. But I found the better way is to buy the gold and hold on. So instead of dicking around with the coins, I went to the next level and then started buying this. And then I don't have to worry about the drop up. It doesn't drop up. It just goes up, basically. And now it's just going to go to the moon. So that's what you look at. So there's gambling, poker, craps, casino games, but the casino has screwed your odds up. So that's why I don't play much craps and blackjack anymore. The odds are screwed. Plus, they want like $25 a hand, which I don't want to play that much. I just want to get the streak. I don't want to risk $1,000. I want to risk 200, but I can still make 1,000. So those are type of gamblings. Then you can go into the banking to make investments, which are kind of gambling. Well, a money market, you get 5%. That's not gambling, provided the bank doesn't go out. Annuities, 9%. That's not, you're going to get 9% unless it's got to do with houses and they don't pay their mortgages. You're going to get screwed. So now there's a lot more risk in what you think are not risky assets. Then you got the stocks. Bonds are stupid. I would never do that. You'll never get paid back. So a lot of the Madoff stuff, the Ponzi scheme stuff, you want to stay out of. So that leads you to gold and silver as the safest play, the best return with the least amount of risk of all the gambling and all the investments. So that's why I'm in it, is after looking it around, well, I can put all my money and go play craps. Don't think so. I can go play poker. Don't think so. There's digital crap, which I don't trust. I don't know any of it's real, and nobody can prove any of it's real. I don't need a blockchain called a general ledger blockchain, which is basic 1, 2, 3 accounting. We debit office supplies and credit cash. I mean, who needs that? So basically, we're in the best thing, which is gold and silver. And the only difference is silver was $29.90 today. It was up to 27. He's $2. Oh, he's still not going anywhere. He's $2 over. And silver's about to really go to, I think it broke the 26.22 that Mark McGuire was talking about, which then makes it 20. which then makes it, now it's at 27 and it's up 80 cents today. It dropped back to 26. You'll get the dropbacks, but they're not what you think they are. They're not profit taking. Nobody's taking profit on it because it's physical. You're either buying gold or you're not, and you'd have to sell a lot of gold for the price to drop. So it's not a stock. It's not profit taking. There might be days when people aren't buying. Like I said, yesterday was one of those days where it kind of didn't do anything. But then we look at today and it opens up and boom, it's 27, it's 23, 26. So we're at 2,300. And silver's a nice comfortable 27.50. So you're fine there. So if you understand this game, this is the easiest game in the world. You have no risk. You can't mess around with the gold. You can't inflate it, which is printing it. So you're starting to understand all the games that we play and then how to win at them. And that's what I encourage, is to understand how to play the game. Don't listen to somebody. Don't listen to Rick Rude or Reichert or Andy Scheckman. Don't just listen to them if you don't understand what they're saying. You need to be able to listen to them and go, this guy's full of shit. These MMT guys are full of shit. They want to sit there and print money like nothing's going to happen. There's no consequence. These are just idiots. So you want to make sure you're not listening to the idiots. There was this guy on earlier. This guy, Yanis Fokanis. And he sounds like he knows what he's talking about. Then I looked him up. He's Greek. He's a Keynesian. So he makes some comments like the U.S. has been doing it because other people are paying their debt. What the hell does that mean? Because they buy our T-bills? Okay. Again, I don't really understand how that benefits the U.S. We're selling money and they're buying it. I guess maybe that's what he means. That's the only thing I can make out. And he sounds intimidating, and he's Greek, but he's the one that bankrupted Greece, and he's a Keynesian. So you got to be careful who you listen to. This is what Jim Reichert, MMT guy, he's a Keynesian. He'll talk, and they talk down to you. Like, you're an idiot. Just listen. I'm not going to explain. Rick Rude does the same thing, and he's not even an accountant. He's a credit analyst or something. He doesn't know what he's doing. So keep that in mind. Be careful who you can write down and listen to them, but you better know they're Austrian or Keynesian, or MMT or whatever they want to call themselves. If they're not Adam Smith, don't listen to them, because they're wrong, because they don't, we can just keep printing money no matter what the debt is. That's just wrong. That's not good practice. That's terrible practice. You're not making any money with that. So hard to really understand what these guys are doing. So you don't see, because then you make mistakes. So, like, I teach you how to bet football. We look at the quarterback and the running back and the defense, and we bet on Mahomes as a dog and Burrow as a dog. Then you might get some other guy who we love Lamar. We're going to bet on Lamar. So you bet on Lamar and you lose. Well, you don't even know why you lost. You don't even analyze Lamar, that he's no good. And you certainly should be betting on Mahomes. So if you listen to the wrong guy in the Baltimore KC thing, you're going to lose money when you easily could have made money just by betting Mahomes. And that's my point. So please understand who you're listening to, because I know people have a style. Hitler had a great style of talking and passionate and energizing the crowd, but he's out of his freaking mind, as was Stalin. So you can't just listen to people to listen to him. All right. EGON's 929. We're going to play the whole thing. It was very good.
These central banks purchasing gold instead of U.S. treasuries. And you guys had a chart here that you recently put out. So walk us through a little bit about this. And is this really, in some ways, a one-way equation that doesn't resolve back the other way?
Yeah, so this is the obvious consequence of this debt-driven world and led by the US, which is, of course, bankrupt. They say they can never go bankrupt. When you print unlimited amounts of money and when you increase debt exponentially, you are basically just printing worthless pieces of paper. The US has been so far skillful enough from the time the gold window was closed, of course. But then with Nixon and Kissinger, then they introduced this petrodollar that they told Saudi Arabia that, we will support you with money and with investments and we'll send you weapons, etc. If the whole world buys oil from you in US dollars. So that was very clever scheme. So we've had a lot of dollars floating around in the world.
Another Ponzi scheme.
But that is now reaching saturation and is all now. We have, of course, the de-dollarization, which everybody's talking about, and it's happening. Can't happen overnight because it's a long process. The world's been dependent on one currency, sadly a rubbish currency that is way overvalued because of all the printing, but it's kept its value because there have been so many who've been using it and trading in it. But now you see here that you show.
So he's talking about the dollar. He's talking about the U.S. being bankrupt, and the dollar is way overvalued. But it's controlled by J.P. Morgan and this and that. And so that's what he's saying. And he's like saying, the U.S. dollar is gone. And he'll get to the gold part. But he's saying the U.S. is broke because you can't keep printing money to pay for your debt. You can't. There's a limit of how much you can print. You just can't keep printing it and not have any problems. So keep that in mind. That is... that's what's happening. So that's what EGON's explaining. So yes, we trust EGON. So if you're at home and you hear an EGON, listen to it and he knows what he's talking about. All right.
Here, no, the US has basically had a wonderful means of financing their extravagant lifestyle by issuing unlimited treasury bonds. China used it as a way of exporting to the US, giving them credit. Japan has held treasury bonds for a long time. Other countries have also held them, so many, even Russia, Saudi Arabia, etc. But that's come to an end now. Everybody is now selling their treasury bonds. Nobody wants them. Russia sold them. China is selling down as fast as they can. Japan is reducing slowly. And that's what you're seeing here in the red line. Everybody's selling treasury bonds. So that means that the US cannot finance itself anymore. And so what we're going to see in the next few years that the only buyer of US treasury bonds will be, or the US treasuries will be, the Fed, central bank of the United States will be the only buyer of the debt that the US government issues. So first country, because they haven't got any money, they borrow. And then since nobody wants to buy that debt or invest in it, and that's what's going to happen or happening now, and it's going to happen at an accelerated level, they only have one buyer for the debt, and that's the Fed. And that's what you're showing here with the red line, or we were showing in the graph we published. So that's, go ahead.
I was going to say, for those that are just listening, we're looking at a graph of the growth of central bank gold purchases that just from 2013 to 2023 just keeps going up to the right, relatively gradually from, let's call it $50 billion to just under $400 billion. Yet we see the holdings in U.S. treasuries grow a little bit and then drop off dramatically starting in 2021. So this just really illustrates sea change in the way that the U.S. government can really finance its debt. This continued war effort, pension plans, all of these different things. It just shows this complete change in the world's holdings. And this is seemingly, or a good portion of it seems to be going into gold, right?
The problem that these central banks are clever buyers of gold. They never go into the market and buy lots of gold. They always go straight to another central bank, so do deals not, on the market. So that's being shown. And therefore, because they never want to push the price up. We haven't got to the stage yet when there is demand for gold to the extent that the price really goes up. At the same time as the clever buyers, like the central banks, buying gold, investors are selling gold. If you look at funds and ETFs holding gold, I mean, that's gone down by something like 30% since 2020, whilst the gold price initially dipped a bit, but it's gone up dramatically. Purchases of these funds of gold decreased dramatically in spite of the gold price going up. So that means that there is no interest in gold right now. Central banks are clever. They know what they're doing. They're buying. Funds are so excited by the stock market and about other assets, so they're not buying gold. They are going to change their mind very soon, because gold is now lying around in dollars, just around the 2000 level, a bit above. It's always possible that if we get, I expect a major stock market sell-off coming at some point, probably not too far away. It's possible that gold initially goes down a little bit, but this time it's not going to continue down, because there's no alternative for people. There's no alternative to selling once they sell their stocks. What are they going to buy? They're not going to buy treasuries, because treasuries, as they know, that's just rubbish. So a lot of them, not everybody's going to buy gold. And so we haven't seen that buying yet. And when the gold goes over 2,100, it's going to move very fast in my view. I'm not worried about the price. So I'm talking about price. I'm not really.
It gets going pretty fast. So what do I say? The Titanic. What do I mean? Well, the Titanic is all the useless crap, right? This is worthless. So as he's saying, everybody's jumping into stocks because they can see it doing well. But when they start getting out of stocks, they're not going to go back into dollars because it's worthless. So all the stock people don't want to get back on the Titanic. They're going to jump to gold. That's the next move, because there is no other competition to this. Yeah, you can be in the stock market now, but as it starts tumbling, because the outside of the U.S. starts dumping their dollars. See, as people start dumping their dollars, they're going to sell their stocks. And as I keep telling Luke, they're going to sell all their stocks, they're not going to hold on to the gold and silver stocks. So as they sell their stocks, there's nowhere to go. You don't want to go into the banks. You don't want to go into the dollar. So your only option is gold. That's your safe haven. And that's where they're going. So that's why there's huge demand. Huge demand pushes the price up. There's no competition, pushes the price up. So this is what we're playing. We're playing economics now. We're not guessing. This isn't maybe it'll go up. I hope it'll go up. This is that. And now I don't know when this was done, but he's saying, well, when it hits 2,100, we're at 2,300 now, buddy. So at 2,300, you can see what's happening. It's just zooming.
Interested in the price. I don't like giving targets in gold, because I've said many times, gold will go to levels that are unfathomable today, and we have no idea. But it doesn't matter. Some people give a price for gold in X years' time or whatever. I did maybe 10, 15 years ago. I stopped doing that a long time ago, because you can't give a price in gold. Tell me what you're measuring it in something that's going down to zero. So it's totally useless to measure it in a currency that is worthless. The only reason for doing that is that if you did continue to hold the currency, you know how much money you're losing by not holding gold. Gold is just pure and simple wealth preservation. But as I said, it will be wealth enhancement in coming years. Of course, there is no more gold around. There is about 3,000 plus tons of gold produced every year from the mines. And then there's another 1,000 tons or so of gold being refined from jewelry, etc., and scrap gold. There's no chance of producing more than that, which means that the increased demand that we will see in gold, which will be major, can only be satisfied by a much higher price. So people want to invest $1 million in gold, and then they will get, in a year's time or 2 years' time, they'll get half of what they would get today for $1 million. That's the way it will work. And that's what we're going to see. I'm absolutely convinced.
What does this mean for the U.S., which holds, according to the official numbers, the most amount of gold out of any country? Are they going to try to
You'll love this answer.
monetize somehow the 8,000 plus tons of gold to help with this fiscal situation in some way?
Number one, they got to show their cards, because people in the gold industry, nobody knows, of course, but we have a gut feel that they haven't got 8,000 tons, because there hasn't been a proper physical audit of gold in the US since Eisenhower's days. There's been part audits, but there hasn't been a full audit taking into account also all the derivatives and futures that goes against this gold. So what has been happening in the last few years, you see that flow, is that central banks are lending gold to the bullion banks. Bullion banks are the major banks that are dealing in gold. Central banks lend gold to the bullion bank. Before, the bullion bank would keep it in their vaults, mainly in London or in New York, but in recent years, last 20 years or so, you look at China's demand of gold going up very strongly. In the last 20 years or so, that gold now from the bullion banks that they have borrowed from the central bank, and they give the central bank an IOU, and then the gold bars, which are big 400-ounce bars, mainly from central banks, they go to Switzerland to be refined, and they're broken down into 1 kilo bars, and Switzerland then exports them to China, to India, etc., big buyers of gold. So now that gold is gone from the West forever. They're not going to send it back. So all the bullion banks now they have an IOU to the central bank. And if the central bank says, can you please give me my gold back? There's no chance for these bullion banks to give them the gold back because they don't have the gold. It's been sent to another country that are never going to send it back. And therefore, there will be major shortages of gold. And it's not a balanced market. And then you have on top of that, of course, the futures markets, etc., which is mainly a paper market, not a cash market. There will be major shortages of gold as these paper markets blow up. And those paper markets are not just futures markets, as I said, they're also central banks and bullion banks that deal in these futures or in these paper markets of gold. So that's going to be fascinating. So coming back to your question, I doubt, and the others too, that the US actually has 8,000 tons. What they have, nobody knows. Do they have 4,000 tons or whatever? So if they're going to revalue the gold, the world's not going to believe it, in my view. Certainly not the BRICS side of the world. These southern countries that actually buy physical and hold it. I think that whatever the US is trying with its gold, no one's going to believe it, and it will have very little significance to make any change to their economy or to their deficits or to the collapse of the dollar.
So the US doesn't have any gold. That's what we all believe. See, now for me, if I say, I just went to the gold store and I bought an ounce of gold, you'd be skeptical, going, "Oh, really? It's a show. He's not serious." So I go and I prove it. And I said, "Look, here's my gold. I went to the store. I just bought it. 1 ounce of gold." It says 1 ounce on the back. Right there on the side, 1 ounce. You can see it there. 1 ounce gold. Okay, you can see I bought it. I show it to you. I prove it to you. There it is. I bought this today. So why doesn't the U.S. open up their vault and say, "Look, we do have 8,000 tons." Now, what kills me is idiots like this guy still thinking that they have 8,000 tons. I mean, nobody believes they have 8,000, and yet here's a guy still thinking they have 8,000 tons. I mean, this just blows my mind how stupid this guy is. And then I was doing my money heist, and I said, as soon as they at the end of the money heist, the last episode, the professor shows that they took the gold out with videos. Look, here's how we got the gold out, and they're looking for it, and look at the Navy ships, and the price of the Spain dollar went to zero, and Spain was screwed. Their whole economy shot, bankrupt. And then they make a deal where I'll send you back. You let us out and don't chase us, and we'll bring you back the gold. So to get us out and free, we'll give you back the gold. You let us go, and then you'll be solvent again. You won't be bankrupt again. So you'll gain the bankruptcy. So he lets them do that, and then he discovers that they're not gold. They didn't give him back the gold. They gave him brass painted gold. So he's sitting there with a bunch of brass. So he's going, "Shit, I lost all my gold. He had 90 tons of it. I don't have any more. Well, now what do I do?" And the professor said, "We'll show that you don't have it, and you'll be bankrupt if you kill us. If you don't let us out of here, everybody's going to know that you don't have 1 ounce of gold, and you're bankrupt, and your country's done, because you need gold to back the currency." And that, what I believe, is what's going on with the U.S. We don't have any gold, but since nobody's exposing it, nobody really knows if the U.S. has gold or not. You can, like this guy said, oh, are they going to revalue their gold, the 8,000 tons? And he's saying they don't have 8,000 tons. If they do, they'd show it. And so that's what he's saying. Now he's saying, I don't think it wouldn't matter because Russia's got 30,000 tons and China's got 60,000 tons. So nobody cares about the 8,000 tons that the gold that the U.S. supposedly has. They have to show us. We don't believe they have any. So now they have to prove that they have, and we don't believe it. So we're going to assume they don't have any. And that's really what it's come down to. But the U.S. has no gold. So this is the concern. The U.S. has no gold. How do we go to a gold-backed currency? And we can't compete with the BRICS gold-backed currency with our dollar that's heavily printed, because these idiots think, well, if you have debt, you can just keep printing. It won't. There's no consequence to just printing your dollar. That's not backed by anything. Anybody's like, what are you talking about? There's huge risk. What are you talking? You can't print a dollar. You can't just print them all and think they're going to hold the value. So that's how stupid these guys are. That's why I don't understand it. If the Austrians, which have been proven correct, and what the U.S. was founded on in 1776, thanks to Adam Smith, how did we get to MMT? And then everybody just believes MMT and nobody believes Austrian economics anymore. Where did that come from? And now they're brainwashing the kids, and they teach them how to be communists and socialists in school now. Instead of learning, it's everybody helps, and it's the government's right, and you listen to the government, and the market's run by the government, not by you. It's like, what are you guys teaching this shit? So that's the problem with it. So that's why I'm here teaching Austrian economics, because apparently I'm the only one and nobody understands anything. So my earlier video was exactly the basics, right? It's if you print a lot of money that's not backed by gold, it'll go to zero, and you're buying gold with the paper money now because you can't. The dollars, this is worthless. So you're basically, this is worthless, and then therefore this is got. So we're trading, and we're still able to trade, even though this cost me $2,400 today. I was able to trade 2,400 worthless dollars for $2,400 of value in gold. And it's the biggest no-brainer I've ever seen. It's the easiest investment bet. That it's not a bet. It's not even an investment. I don't know what it is. It's the easiest thing I've ever done with no risk at all. No risk in the portfolio, and I diversify with Maple Leafs and Cougarons and Eagles and Philharmonics. But that's all it is. It's a very simple thing that let's look at eBay. Let's see where that's at. So I paid 100 over spot. So it was. Let's see. This is 24.11. I paid a little bit more than that. Let's see. Here you go, 24.67. 24.13 is about what I paid. 24.39. So it's up there, 24.27. So I paid a little bit more. 24.62. So I was right in the ballpark. Usually he's very good. I think it was 110 over spot. It was 23.25. So I paid a little bit more, 24.25. But that is what spot is. And sometimes these auctions are coming from yesterday. And with gold up so much, it was up like $60 that, you'll see it tomorrow near 2,500. So I'm not worried about it. I'm not worried that I do good because most of my gold ounces were bought at 1,800, and I'm seeing 2,400. So that's the bottom line. So you're trying to be smart. You have to understand things to be smart, or at least ask me or find the person who is smart to learn from. That's why I say you listen to Reichert or Andy Scheckman or Maloney. You're not going to learn anything from these guys. Or Peter Schiff. There's nothing you're going to learn. They're not economists. They're salesmen. They're just trying to sell their stuff. There's nothing you're learning from them. Me, I'm not selling anything, so you can actually learn. But I have a master's in economics, and I understand all this, and we gamble. So therefore, that's why it's, you can learn from me. But that's why I go into in-depth explanation, right? If you print too much, it's worthless. Are they saying that? No. EGON says a little like that, but anyway, I thought EGON's a very good show. Obviously it's part of a bigger one, and obviously it was done a week or two ago, which I might have already read, because he said, well, if it goes over 2,100, and then Mark McGuire says if silver goes over 26.22, well, silver's 27.50, so they both broke through. So we're looking at it, just pound it, go up and up and up. And what'll happen is, as people see gold at now 23.20, they're going to go, wait a minute here, 23.20, maybe we should buy some gold. And silver is finally 27. Well, the high on that's 50, so it's got a ways to go. But gold at 2,300, and the highest was 21.50. Now they're like, but gold keeps going up. Like, what's going on? And like my friend said, well, they don't even know what paper gold is. They don't understand. Like, they see gold at 20, at 23.20, they're selling it because it's at their all-time high. They don't realize it's going to go to 20,000. I mean, they don't realize what they have, and that's really what the problem is. Well, it's not the problem, but that's why people are just, they're not. And they're not. It's not that they're stupid. They're not educated, but they don't try to be. So when I'm in the interview with the guy and I go, "Do you know why gold's, at 2,000 is only 2,000 an ounce?" And he said, "No." Why don't you? Isn't that something that you would try to dig into? Wouldn't you say, that's a good question. I wonder why it isn't. That's the point. That's what being stoic is. Stoic is like, look, I know I don't know everything, but when things come up like this, I want to learn it. So I'm going to see what exactly is going on. That's what stoic is. And that's the problem. Yeah, that guy's prices. See here, a half ounce is 12.74. He was 13.60. He was really high on his prices. Quarter ounce eagle 650 was about where he was. But he was a little high on his 1 ouncers, and he was certainly high on his half ouncers, but maybe they haven't been. Let's go to my watch list and see. So Cougaran 24.08, the dollar's 24.50, so not much of a difference. The half ounce 12.78, he's 13 something, but the quarter ounce was right. Maybe it was 12 something. No, it was 13 because I would have bought it at 12. Yeah, this is 1900 for the two, where he was more than that. He was 13 something for the half. I'm glad I didn't buy it. But 657, 660 for the quarter is about right. And the 1/10, he was right on 269. The same with the Maple Leaf. And the quarter ounce Cougaran 628. Yeah. Let's see. 1/10 of an ounce Cougaran 245, half ounce Canadian. Now that's cheap, 1161. I'm curious if he changes that. Half ounce Cougaran 1222. See, look at the difference. The Cougaran and Maple Leaf are the same, so a half ounce Cougaran at 1222 is more like it. This half ounce Maple Leaf doesn't make sense. The Buffalo Silver's $36. I could have got it for $29. And then another 1 ounce Eagles 24.11, and a 1 ounce Maple Leafs 24.10. So some things don't make sense. Yeah, the Eagle here is 12.78. He had for 13. I thought it was kind of weird. All right, so you saw Mark McGuire, who says BRICS is going to be gold-backed currency in May. COMEX is totally blown up because too much buying from the central. But see, now Mark McGuire says too much buying from the central banks is forcing COMEX out, but then EGON says, well, the central banks doesn't buy from COMEX, they buy from the other banks. So there's two different points of view between EGON and Mark McGuire, where one's saying the central banks buy for COMEX and the other one's saying they don't. I don't believe EGON. I believe there's certain buying, but do they really want to sell? So if I'm Austria, do I really want to sell my gold to Switzerland? All of it. Or, I'd be like, oh, go buy it from COMEX or something. And that's why it is going up in price. It's probably very hard to find now. Again, of the 255,000 ounces, it's probably all out already. It's not like there's just sitting there a pile of 250,000 ounces. There's not a lot out there, right? It's already taken. So that's the other thing. There is 255,000 ounces or 250,000 tons out there, but of that, most of it is already gone. Africa's got a ton of it, and all these countries have a lot of gold. So all 255 pretty much is gone. When I go to there, this was somebody came in and sold this to the guy. And he got spot. So he bought it for 20. He probably bought it yesterday at 22.75. He sells it to me for 24.25. So he makes his money. The guy who loses out is the guy who sells it at spot when it's going up. It's the worst thing you can do. It's like selling a stock. The stock goes from 10 to 30 and you sell it and then it goes to 100 and you're like, holy shit. And that's what's going to happen. A lot of people are going to be very upset dumping their gold at 2,300, 2,200, because when it hits 10 grand, they're going to be, oh my God, what did I do? Because they didn't, unless they had to sell it, which they probably didn't, They shouldn't have been. So anyway, that's what's going on. So what else? So we covered gambling to the most part, the poker, the casinos. A lot of it's risk taking. A lot of it is being smart. And a lot of it is protecting your bankroll. You really want to look for a streak and get on a streak. Then you can make money gambling. But if you're on a bad streak, you want to kill it as soon as possible. That's why I don't like playing $25 a hand blackjack, because I don't want to come out with $500 and then lose it. I'd rather pay $100. I can make the same amount with 100 as I could with 300 or 400 or 500, but I got to pay 25 a hand instead of $2 a hand or $5 a hand. And again, I'm looking for the streak, so I don't want to have 25 a hand on and I'm on a losing streak, right? And poker, I'm playing the other people, so you're just trying to trust that you get a read on them and you can trust them. Like KGB was very easy to read. He ate an Oreo cookie. He's got a good hand. He checked the turn. He checked the initial. He checked the flop. He checked the turn. Well, he called the flop. He checked the turn, and then he bet 15,000 on the river. I mean, that's pretty predictable that he's not betting 15 grand. He's not going to try to bluff you out for 15 grand. You don't check 15 grand on bluffing. What are you winning? There's nothing in the pot, right? He bet $600 pre-flop, so there's $1,200 in the thing, and then he made it 2,000. Damon, so he called the 2. That's 4, so that's 5,000 in the pot. We checked the turn, so there's 5,000 in the pot. He bets 15,000. That is not a bluff. I mean, because you're risking way more than the pot is. So it doesn't make sense. If the pot is, 25,000 and you bet 20, that could be a bluff because you're betting a lot into the pot. But to bet 15,000 into a really $2,500 is all he's got in there pot doesn't make a whole lot of sense that it'd be a bluff. It's not it's a weird bet because it's not a bet. Psychology is the bets to keep him in, but he's betting 15,000 really wasn't to keep him in. He was probably expecting him to fold. So I think it's a kind of a bad bet, his 15,000 into such a small pot where, unless he's trying to make it look like a bluff, but he's only getting called by Damon's full house. That's it. Maybe the flush, but that's all he's doing. Maybe he thought he hit the flush. I don't know, but kind of a strange hand from a very strange movie. And again, so on the Gambler with James Caan, he's on the streak and he doesn't ride it. He keeps getting off. Okay, you hit the roulette. All right, let's go. You hit 13 passes in a row. All right, let's go. You hit four back racks in a row. Well, let's go. You hit you double down on 18 and hit the 3. Okay, we're done. Every time he's hot, he's quitting. And then in the basketball games, he's betting and losing. And you got to question the guy. You're betting a Harvard Brown game. You should know the teams. Did you know all he did was look in the paper. Did you look for injuries? Did you look for something why the spread was even? If Harvard's such a dominant team and Brown sucks so bad, why was the spread even? So he said, wow, you got to be kidding me. The spread's even. But he didn't ask himself why is the spread even? It doesn't make sense. They should be 10-point favorites and they're even. Something's up. So that's all gambling is the risk. And then why are you betting the games? For the action. Well, then maybe you shouldn't. you should bet to win. And if you're going to bet to win, you got to know the injuries. So what do I do when I set the table for you guys for, let's take the Super Bowl. Any injuries? No, Mahomes is fine. Kelsey's fine. Defense is fine. Okay. No weather to worry about. We got Mahomes against Purdy, pretty even. Mahomes is a little better. At the end of the day, we tease the dog. Great defense in Kansas City and Mahomes. Very, very few times I'm going to bet against that. The Niners, very good defense with Purdy, but Purdy's not Mahomes. McCaffrey's good. At the end of the day, I thought it would be a very close game, which it was. It went to overtime, and I took the points. And it was very easy to take the points, but I had it pinned down that it was virtually an even game. So and if the Niners were dogs, I would have taken the Niners. But with Mahomes as a dog, it's even easier. So I had it all calculated out, who I'm taking, why I'm taking. That's the whole point to it. And you must have a process if you're buying stocks. Why? Don't just buy stocks because Kramer says it, or Merrill or Buffalo Buffett says it. I mean, you need to pick your own. And then I'll go to Madoff, and then I'll go to Attack on Wall Street. So Madoff, why are you investing with Madoff? Because my dad's in it, and he gets paid every month. Madoff always pays him. How does he do it? Well, we don't know. Probably a Ponzi scheme, but we don't care. We get paid every month. Okay, what's going to stop it? Well, the housing crisis. So if you understood and you could look at the whole picture of action reaction of the Titanic, hits the iceberg, its water's running in, it's sinking, you had to get off. So if you can correlate the iceberg to getting off, that's the whole scheme of everything, right? That's life, right? And the same thing with the lost my train of thought. The same thing with their printing money, the MMT guys. They're printing money. The money loses value because you can't print that much. So that's the Titanic. So the iceberg's the MMT. Money printing guys causing the money to lose value because you printed too much, which causes the collapse, which causes everybody to run into the gold boat. And that's why you get out of the dollar. They printed too much and it's worth nothing. So again, you have to figure out the cause and the effect, or what happens. And that's true in everything. So you just have to learn it. The girl smiles at me or she doesn't smiles at me. You go hi to a girl and she doesn't say hi back, just keep walking. Look for the next girl who does, who you like. And then even then, you got to get the personality. You can't just, because she smiled at me, it's because she's pretty, I'm going to go out with her. No. It's got to fit. It's got to be, you like her and it's a nice thing, and things like that. And if you don't do that, it just doesn't make any sense. So that's the whole point. There's 3 or 4 things that come in, and no matter what, poker, it's reading the hand, reading the bet, asking yourself why did KGB eat an Oreo? Why did he check? And then why did he bet 15,000 at the end? Does he normally bet 15,000 at the end? Well, let's say I've been playing for 6 hours with the guy. He's never done that before. He ate the Oreo, or no, he didn't even eat the Oreo at the end. Yeah, he did eat the Oreo. This was the first hand. And then why are you betting 35,000? Because you got a full house. You're supposed to be playing the other player. You're the fish in the room. If you can't spot the fish, you're the fish. Why are you betting so much on your full house when it's not the best full house? And he just made a 15,000. It's one thing to make the bet, right, and let them call you. It's another thing when they make the bet and you call that. That's when I'm very leery about, when somebody makes a $200 bet in my world, to call it. Like, I'd rather call when it's kind of dead out there, when it's, I bet, there's nothing much. I bet 50. Okay. Let him call me. But there's nothing there. I don't want to call a $500 bet or a $300 bet. That's not what I want to call. Especially when he's made the bet and then I got to call it. It's one thing when it's out there and I make the bet, then he has to call it. That's a whole different thing. But if he makes the bet, now I got to call, because the way I play, people know I'm smart. People know I'm not playing junk. So when they make a bet at me like that, I probably shouldn't call most of the time unless I'm hiding my four eights. Right? That hand, nobody knew I had it because I had a pair of eights and a pair of eights flopped. And I'm just sitting there and they're betting and I'm just okay. So there was no way you put me on 4 eights. I didn't do anything to get it. You didn't know what I had. Maybe you thought I had 3 eights. I don't know. But there was nothing there that gave away my hand. So that's what you're looking at. So anyway, if you use logic, you need to know everything, right? Why you're buying a stock, why are you listening to Reichert or Rick Rude or Maloney or any of these idiots? Why are you listening to them? There was that woman at the coin store. I listened to Lynette Zing, because she's a woman. I don't listen to Lynette Zing. She steals all my ideas, basically. I tell her, and then she says it like she's getting away with it. But I don't. She doesn't know what she's talking about. I don't think she's an Austrian. I think she's a Keynesian, or I don't even know if she's an economist. The thing I do like is she does say buy gold and silver, but it's insulting when I'm teaching the lady, and she's listening to Lynette Zing, and I'm saying I wouldn't listen to her. Why don't you just listen to me? What are you listening to her for? So understand why you're listening to somebody, why you're following them. And like when Bobby, the daughter, just have the daughter go to this early video I did, have the daughter go to that and listen, and then she can make up her own mind. Yeah, I'm going to buy gold and silver. Yeah, oh, the dollar's gone out. I didn't know that. So now she knows it, but she has no way of learning it because they're not going to teach her in school. So that's why I do what I do, because I know there's no other place you're going to get it the way I deliver it, with facts, not fiction. So that's really the key to it. Anyway, I think it's time for dinner. Man, I've already done one, so I think that's enough. I tried to limit it. I limited it to like 50 minutes, the first one, because it was like a basic beginning. This is why and everything. So I didn't get off on too many tangents, and I tried to keep it basic for somebody to try to learn it. But I was very happy they had gold. But when you think about it, when the gold price goes up, people are selling their gold because they think it's the high price. And I'm there buying it because I think it's the cheap price. 2,400 for the gold is a joke from where it's going to go to. And that's the thing. Let's take one last look. Where is our gold? Do, 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 do. 23.26. The high was 23.29. Silver 27.50, up 67 cents. So we had a little pullback yesterday. This should go all the way to 35, take a little break and go up to 50, and then take a little break before it hits 100, 150, 250. And it's just going to ride up. So it's going to go up a little a day instead of that big, silver's $35 tomorrow. Gold, I'm very happy, 23.26, and it's settled. And the 10 o'clock jump went up. There was no 10 o'clock drop. Apparently, that's when Asia does 10 in the morning UK time, but we're 5 hours behind them. So it should be a later time. Anyway, 2, 4, 23.26. So very happy it's staying way above 23. Now we can go to 24 to 25. So every time it crosses that threshold, more people are going to come in. 23, 26, people are like going, "Oh, maybe I should buy it." The lifeguard at the pool was all excited. So it just keeps going. And that's now you get the emotion, not the logic. I'm logic, right? I'm the logic guy, understanding what's going on. These guys aren't. So these guys are emotion. They go, "Oh, it's going up. I better buy because it's going up. I want to buy more." And that's my point. Yes, exactly. It's going up. You want to buy more. And that's why, but we're already in, right? We're 3 steps ahead. We've already saw this coming and bought at very cheap prices. I know I've been buying 16, 1700 ounce gold, $23, $24 silver. Silver is about to go. So if we get it 10 to 1, 10 to 1 right now is $235 ounce silver. And that's where it's going. But it's going to be harder because gold's also not going to just sit there. Gold's going to go. Alligator's thinking 3,000, but he doesn't understand. You set up that the COMEX is not going to drop it, so it's just going to keep going. There's no reason for it to profit take, because if you profit take, you go back to the dollar. Well, that doesn't make sense. You're getting out of the dollar. So that's why none of the central banks are going to sell their gold. They all want it to go up because they all got tons of it, right? If you had 10 tons of gold, you don't want the price to go down. So the price is just going to keep going up and up and up. By next week, we should be at 2,400. And again, this is spot. And again, what we buy, we pay over spot with the premium, but we don't care because we're trying to buy it, right? They're not screwing us. All the coin stores have the premium, but they don't realize it's the paper price. And the problem with the premium is we understand that they're charging it. So it's not like we can find it at 23, 26. You can't find gold there. So we got to pay a little bit more. We got to pay 24, 26. Okay, that's what we need to do, and that's what we do. But it's still, when it hits 10 grand, are we going to care that we paid a premium? So they got to make money that they do the premium on, and that's fine. It's more important that I got the ounce than what I paid for the ounce, because this isn't a stock, and I'm not trying to make money. I'm not trying to profit take this. I'm not trying to, I bought it at 2,300. I'm going to sell it for 2,500. I bought the ounce I bought last week was the Cougaran, or no, it was the Maple Leaf. I bought for 2,250. So just out of curiosity, what is my Maple Leaf today? I paid $2,250 for the Maple Leaf. All right, so it's 24.11. As is that. So that's about the new price, 24. I paid $25.50. I made $160 in a week. I don't care. I'm not going to sell it back at 24.11. Well, I wouldn't get that. I'd get spot. So I'd get 23.26 right now. So I still made money on it. I bought it for $22.50. So I still made $60, even though I paid the premium on it. So, but I have the gold. And as we see going forward, the Titanic's sinking. You want to be off the boat into the lifeboat, and you don't want to leave the lifeboat. That's the key. So this is the lifeboat. I don't want to leave the lifeboat. I have no other thing to do. I don't want to leave it. So therefore, I didn't buy it to get off the lifeboat. I bought it to get out of the dollar. So that's the key. Understanding this is worthless. I buy the gold because I could use this to buy it, and therefore I'm getting out of that So I'm into the lifeboat, and that's what I'm in. So therefore, I don't care. And that's what it is. So understanding that once you're in the lifeboat, you don't want to leave the lifeboat. There's a price you'll pay to get off the lifeboat, but that won't happen until there's a new currency. So even though BRICS is announcing their gold back currency in May, they're going to need a much higher gold price. But I doubt that the currency's available in May. I got a feeling it'll take a longer time for the currency to be out there. So if they do it in May, maybe it happens in September, October. But it's happening, and the gold price is going to run. So that's why you just want to be in gold now. Once May hits and you try to buy gold because they're going on the gold back, it's going to be $3,000 an ounce. So as it becomes more expensive to buy it, how much are you going to buy? Are you, like Egon said, he said, well, you'll buy so much with $1 million now, but later on you'll buy 50% of what you're going to buy with the $1 million. So if $1 million were to buy you 100 ounces today, he's saying it's only going to buy you 50 ounces, 6 months from now or a year from now, when the gold price shoots up, and then the $1 million won't be worth anything anyway. See, that's what I'm saying about Warren Buffett, who's sitting there with $2 billion thinking, I'm going to buy a house cheap and a car cheap and this and that cheap. He doesn't realize he's got monopoly money. And instead of buying gold, he's an idiot because he doesn't understand gold, because he doesn't understand the dollar. And everybody worships this guy. So I'm so sick of everybody, Warren Buffett and Reichert and Maloney and Andy Sheckman. They all worship these guys, and these guys are idiots. They don't know what they're doing. Buffett should be in gold, but he doesn't understand it. So he's in dollars thinking that's it. And then this Mike Pinto, I'm in dollars. Yeah, that's because they think the price is going down, but they don't understand that the dollar has no value and the dollar's going out. Or do they think at the end, as the Titanic is going into the water, oh, wait, I'll get rid of my dollars at that point. So again, they're just stupid. They're just idiots, basically. Anyway, with that, time for dinner Friday night. I'll be on early tomorrow, 11:30. I bought that steak, Bobby Bo, the one Luke made. So that's going to be dinner and a salad. And then tomorrow, Chinese is on spring break till the 14th. So no Chinese. So I might I don't know if I should get maybe I'll get barbecue Sunday or Monday. It's probably a better thing to do during the week, but I could go. Well, tomorrow I doubt I'll go get that, but maybe on Sunday, it's a good day to get the barbecue. But see, on Sunday, it's a good day to go do a carryout, or on the weekend where like Monday afternoon, it's good to eat there. But Saturday, it's probably good to carry it out. But we'll see. It's about the same distance as the Chinese. Anyway, so that's it. So I hope you enjoyed and watched the Mark McGuire and Egon. They're both out. I'll look for an alligator. We will see. But Egon just had a few, so this was a new one. I think this was an older one done a week or two ago, because he said if it goes over 2,100, and gold's at 23 now. But you can see it cleared 22 without a problem. Now it cleared 23. It sat there a little bit. They were fighting it, and then it went to 23. And as it says, they're not gonna. That's it. They're getting out. COMEX is getting out because they don't have the gold. The paper gold. The jig's up because of the central bank buying, and they don't have it. And they got to come up with it. So they're invading Bitcoin. So look for Bitcoin to get crushed. And again, Bitcoin's not money. So I honestly don't know why anybody's at Bitcoin. They think they're going to get rich. Just buy gold, you're going to get rich. And you actually own something. So I don't know. You're dealing with people that really don't know what they're doing or why, but they do it. And the bottom line is to make money. So anyway, my Teaser King family, have a great weekend. I will see you tomorrow. And www.teaserking.com. You can get my email there, and you can see my history. And then we'll get to football soon. We'll start getting more into the draft as we're getting closer to it. All right, everybody, take care. Enjoy your weekend.